Strategy just posted the biggest earnings beat in Wall Street history. Earnings per share came in at $32.60, and the street was expecting a loss of 70 cents. That's a 46,671% earnings beat, the biggest earnings estimates beat in Wall Street history. $10 billion in net income for just one quarter. You're witnessing the power of financial engineering through Bitcoin. For reference, over the last 12 months, Tesla, which is the 11th most valuable company in the world, had a net income of $5.8 billion, representing a decline of 54%. Compare that to Strategy's $10 billion earnings in the second quarter. That's more than 70% than Tesla's entire year. This wasn't the result of some product launch or a cost-cutting miracle or a surprise demand spike. This was the result of intelligent capital strategy, raising equity and debt to accumulate the best performing asset of the last decade, Bitcoin. And now that fair value accounting recognizes unrealized gains on Bitcoin as earnings, the game has changed. Let's break it down. So MicroStrategy now holds 628,791 Bitcoin. Their cost basis is $46.1 billion, about $73,000 per coin. Bitcoin is up 25% year to date. That's $13.2 billion in unrealized gains, and now that entire number counts as net income. They've raised $10 billion through equity and preferred share issuances across Q2 and July, and they didn't just sit on that capital, they turned it into productive monetary energy by acquiring Bitcoin. And they're not slowing down. They just raised full year guidance to a 30% Bitcoin yield and $20 billion in Bitcoin gains, assuming $150,000 Bitcoin price by year end. So if you're wondering how one company can turn a single asset into double-digit billion-dollar earnings, it's simple. Wall Street finally sees what happens when a sound monetary asset meets an intelligently leveraged capital accumulation strategy. This is the first quarter where Bitcoin's strength, measured by fair value accounting, hits the income statement directly. And what it proves is this: telling a story of financial strength, money you already have, is far easier for investors to comprehend and far more powerful than promising money you might earn someday. In other words, the expectation of future cash flows. This is what Bitcoin does for a public company. So the job of a public company is to generate shareholder value. Bitcoin has a 4-year compound annual growth rate of 30%. It's the best performing macro asset on the planet. And fair value accounting now lets public companies reflect that growth as earnings. That makes Bitcoin one of the most productive assets a corporation can own. In fact, it makes buying Bitcoin the most profitable thing a public company can do. This is the next great corporate playbook. Meta posted $18 billion in net income last quarter. Microsoft posted $27 billion. They jumped to $1.7 trillion and $3.8 trillion in market cap, respectively. MicroStrategy just posted a $10 billion earnings this quarter, and it's sitting at a $113 billion market cap. That tells you one thing. Wall Street doesn't fully get it yet, but they will. Because now there are only two types of public companies: those who figure this out and those who are about to be left behind. That's all for today's video. Thank you so much for watching. Make sure to reshare and, of course, follow for more, like if you enjoyed, and check out Horizon. Horizon lets you stack Bitcoin using your home equity without new debt, monthly payments, interest charges, or term limits. You can check that out at joinhorizon.com or by scanning the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.